Joining us now to discuss all this investment and other Bitcoin news is Haohan Xu, founder and CEO of Apifiny, a digital asset marketplace. Hi there, Haohan. So the crypto market cap is shattering records. Huge investments are being made in the space. What is your end of year forecast for Bitcoin's price?
Yeah, we think Bitcoin could very potentially reach 100,000, but conservatively, I think we agree with the Bitbo folks. The Bitcoin will easily reach over 80K, and that's our forecast here.
And at the end of 22, what's your longer term view?
The longer term view is obviously very optimistic, given the recent launch of the ETF. There's been a lot of chatter in the crypto community about the ETF's ability to track Bitcoin. And I'm on the same page as those folks that this ETF is a very inefficient, expensive way to gain exposure to Bitcoin. However, the impact in the crypto space has been very positive so far. The launch of this ETF has sent Bitcoin to a new all-time high, right? And everyone in the community should be very grateful for that. So the upward momentum of Bitcoin has always been good to the community, and we know that. So SEC is taking a big step here. So there's enormous amount of advisor assets that wants exposure to Bitcoin, and this ETF gave a really good opportunity for them to do so. So you know that on Bitcoin's second day listed, they passed 1 billion in volume, which is way above most people's expectations.
And it could soon open the door for a Bitcoin spot ETF. But you're debuting instant transfers of funds for institutional crypto traders today between different crypto exchanges, which presents a way to exploit arbitrage opportunities. And with the debut of the first U.S. Bitcoin futures ETF, can you perhaps walk us through how traders can take advantage of that?
Yeah, sure. So we're a digital asset network that provides institutions the navigation to the fragmented crypto market. So when new institutions get into the crypto market, they will realize their point of entry into the market all provide them very limited liquidity. This is because in crypto, each exchange is essentially their own marketplace. And like equities, where NYSE and NASDAQ, they hold most of the equity for a single asset. So Apifiny is the only global digital asset network that offers both instant transfers and institutional traders direct access to the order books of 25 centralized exchanges with lower costs than trading directly on those exchanges. So with the instant transfers, traders can transfer funds in seconds to purchase on one exchange, including Epifiny's own hybrid exchange, and sell on another exchange like Gemini or Coinbase. So instant transfer functionality can be activated in minutes without requiring exchanges to do any significant development work. So instant transfers enable traders to act on the best available price, exploit more arbitrage opportunities, and improve capital utilization by cutting cross-exchange transfer times from hours and minutes to just a few seconds.
So I'm curious, are you seeing a lot of people shorting these Bitcoin futures ETF and buying up Bitcoin, or any patterns that you're seeing?
We're definitely seeing a lot of people utilizing instant transfer just because previously, whenever you see an arbitrage opportunity between exchanges, you often have to account into the on-chain transfer time. But with the instant transfer feature enabled, we've seen a lot of demand of traders using our platform because now the transfer time between exchanges are almost non-existent. So traders are always buying high and selling low on different exchanges, and it's helped us with a lot of volume into our exchange partners.
Right. So, and just to go back on the Bitcoin futures, every month and so futures contracts roll or renew. And I'm just reflecting ByteTree Asset Management estimates this contango bleed in Bitcoin futures could be as high as 17%, and ProShares estimates an annualized 2.5% roll cost. So is it just not worth investing in a Bitcoin futures ETF? And does this spell volatility ahead, which is not good for a retail everyday trader?
That's a really good question, Christine. First of all, I think it is a good investment for some of the folks in the traditional financial market, and most of the guys in the crypto community will disagree with me on that. So if you look at it, a lot of people who speak the crypto language seem to forget how oblivious the traditional financial market players are to the crypto world. There are some solid reasons on why such a demand for this ETF exists. So for a lot of crypto native institutions like ourselves, we understand the fragmented market structure in crypto, and are very comfortable with touching crypto directly through crypto exchanges and DeFi protocols even. But for a lot of old school institutions who have been in the traditional financial market for a very long time, they certainly do not. And when they ask questions like, where does Bitcoin trade? Who's the custodian for crypto? How do I transfer crypto? They have a very hard time understanding and getting comfortable with the answers they're getting because there are no NASDAQ or NYSE in crypto. There is no DTCC in crypto. How crypto trades and how crypto clears and settles are very different from traditional assets. Luckily, there are folks like ourselves that can help them with that. The same phenomenon can be said about the young crypto native traders who has never touched a traditional financial market. They don't want to touch US dollar directly. They want to use stable coins because they're just a lot faster. They're asking questions like, what's a broker? Where do I hold these stocks at? What's the parallel of crypto wallet in the equity world? So because there's a huge difference between the two worlds, the ETF gives the traditional market players a way to gain exposure to Bitcoin in a way that they're comfortable with. And I think for that reason alone justifies the existence of this ETF.
Mm-hmm.